My name is Christopher Chang, and I want to tell you a short story. But a situation first. I had a client about 2 years ago. He's a non-U.S. person. He was going to visit his family a lot during this time. So he visited his family in California for about 2 months, 3 times in the past year. He came to us and sees us, and then he asked, I got this document from my local Hong Kong bank. It said I earned for about 500 Hong Kong dollars in dividends. And I need to know what to do because there's some taxes that have been taken out already. So can I get some of this money back? He asked. So I start going through his documents, ask him some basic follow-up questions. Come to find out, he was actually going back to USA for more than 6 months last year, and as such, he was automatically treated as U.S. person, subject to a tax bill of about 50,000 US dollars. Very, very unfortunate. We helped him to reduce some of it, but he did have to pay some of this U.S. tax, and it's very unfortunate for him. Today, I hope to kind of summarize a little about U.S. taxes and hopefully prevent some individuals from having this happen to them, and just getting a basic understanding about the U.S. tax system and tax rules and laws. You can see some of my background on the screen up here. Okay, as a very basic background, U.S. taxes are a worldwide taxation system that taxes U.S. citizens and green card holders on their worldwide income. And taxes are reported on an annual basis. And for many individuals who are green card holders and citizens, they need to pay taxes and do the filing on an annual basis. You can see the most common types of income: salaries, interest, dividends, capital gains, and owning own property as well. The US income tax rate, which might surprise a lot of people, highest rate is 37% right now. And the highest corporate rate is actually fixed at 21%. Right here, you can see an individual tax bracket for different types of filing statuses, but generally you can see that the tax rates are marginal. You earn less money, your taxes are lower. You earn more money, your tax rates are going to be significantly higher. Comparing this and contrasting this to Hong Kong, where Hong Kong has a 15% tax bracket, it's going to be significantly higher, but there are ways to reduce it as well. But generally, if an individual is earning more money, their tax rates will be higher as well. Another common surprise for a lot of individuals when they first come to see us or when they get some background information is the amount of income tax reporting needs to be done and the disclosure that's also required for these U.S. persons. You can see some of the list of different tax forms. I've just listed 5 of them here, but this list is extensive. Every tax code and tax rule has a different form that reflects this. So this is where the complexity really comes into the U.S. tax system. For the disclosure, what's really required is annually, if an individual has foreign bank accounts or foreign financial assets, they're required to be disclosed on their U.S. tax forms called an FBAR. What this really is it's not income tax, it's just disclosure, disclosing highest bank balances. This might also include certain types of bank accounts, investment accounts, or even life insurance policies with cash surrender values also need to be disclosed. Or interest in, let's say, a foreign closely held company, stock that's held from stock certificates. This list might also include certain types of notes or debentures that are held as well. So this list is quite extensive. So now the next question you guys are wondering is, okay, so these tax rules are very can be very significant, very draconian at times. So how can I determine when is this going to affect me as a U.S. person? Really, the key becomes when an individual becomes a U.S. resident, they're going to be subject to U.S. worldwide taxation. There might be some deductions available, and disclosure definitely is going to need to be done. Whereas in a non-resident alien, there's no worldwide taxation, and there's sometimes deductions and disclosure. So meaning that really the factors become, am I U.S. resident or am I a non-resident alien? This is really the determining factor for the U.S. income tax treatments. So next is, how do you become a U.S. resident? First, there's something called the green card test. By simply getting a green card, an individual becomes subject to worldwide taxation. Or in my story ahead, this individual triggered what they call a substantial presence test, which I'll explain a bit later. So it is a green card. Green card is lawful permanent resident status. It looks something like this document here, and it allows an individual to usually to live and work in the USA. And starting date is when the individual gets their visa and they step foot in the USA. From that day onward, they become subject to worldwide taxation. So there's definitely some planning opportunities that can be done before that individual steps foot in the US, and that's why it becomes very important to consult with the right professionals, whether it's lawyers, accountants, or even immigration specialists, to determine when this green card test will be factored in. Okay. The other example I mentioned is the substantial presence test. So simply by spending too much time in the USA, an individual can be treated as U.S. resident alien for tax purposes, regardless if they get a green card or not. What the rule says is that if an individual is obviously spending too much flights, going back and forth to the U.S. too much, they look at if the individual is in the U.S. for more than 31 days in the current year and 183 days in a 3-year rolling average. They look at all the days in the current year, 1/3 of the days 2 years ago, the prior year, and 1/6 of the days 2 years ago. So this is a 3-year rolling average. So it becomes very important, individuals going to the US more and more, to really keep track of their travel schedule more accurately. And another option for taxpayers, let's say if they're married to a U.S. citizen or U.S. green card holder, they're not a U.S. person, but sometimes they might want to choose to be treated as U.S. resident for tax purposes. There might be significant benefits for the U.S. spouse, tax savings, tax deductions, and tax minimization. So something very important to consider as well. So on a final note, there is, I want to go through some of the tax planning that might be available, and definitely I'll be around for some Q&A at the end as well. So some things that come very, very important that we see, and I consult with some of my colleagues, and they see, what are some of the worst case scenarios, and what things are to avoid. If a foreign individual has a foreign business, what are they going to do with the foreign business? Are they going to maintain the business? Is it generating a lot of income? Is it generating a lot of dividends? Is it producing a lot of salary payments? Because there are many opportunities that can be done to pre-immigration tax planning. So finding out what's types of assets or income might be generating is very, very important. Another is the timing of the income. As you saw that the 2 different tests, when they start kicking in, it becomes important that when is the income going to be subject to U.S. taxation and when is it not going to be, because there are important planning opportunities there. So again, do your homework, do your research, consult with the right individuals as well to help you find the right answers to these questions. Individual has investments, or they're making gifts and other assets. This is an area that gets very, very complex. We help advise some clients, but for a lot of individuals, we might even recommend that they consult with the U.S. tax lawyer who specializes in this area, because if they do the appropriate planning, the U.S. taxes can be significantly minimized as well, and not provide clients with the significant surprise, unexpected surprise. I talked about how and when a non-resident alien's taxed. So as a non-resident alien, they're usually not subject to U.S. income tax unless they have U.S. source income only. So that becomes a very important factor to consider there. U.S. real estate. So we have a number of clients in Hong Kong here who have purchased U.S. real estate. They're not a U.S. person, and then they're asking us, so what do I need to do to handle my U.S. tax matters now? So really, the question and the answer is that once they have U.S. real estate, they're going to need to file returns on an annual basis, or they're going to be subject to a 30% withholding tax, which could be quite punitive. So making sure that tax compliance is done right and done effectively is very important. Another question that becomes more and more important is that if an individual has investments or in ownership in a business or foreign trust, what type of structures do they hold? They hold in personal names, they hold in a foreign trust, they hold into a foreign company. These answers are very, very there's so many questions that can be asked. So really, we work with the clients to understand their situation and see how we can help. Again, this is an area that gets very complex. Consult with the right professionals as well. And again, find the right team. Immigration specialists. You need good lawyers. You need good accountants. Whether or not you take into this EB-5 program or get a green card or other type of visa as well, is very, very important. So do your homework, do your planning, and we'll be around for some Q&A. And this is what we do day in and day out. So if you have any questions, come and let us know. We'll be happy to help you. Thank you very much, and I'll hand it over.